Hey everyone, and welcome to this explainer. I am absolutely thrilled you're here today because we are diving into a topic that is literally going to transform how you look at trading and risk. Let's be real for a second. Most people who try to trade markets, well, they fail. And they don't fail because they aren't smart, they fail because they lack certainty. They guess, they act on emotion, and they just kind of hope for the best. But what if you could completely eliminate all that guesswork? What if you could know exactly how a strategy performed over years of historical data before you ever risked a single dime of your own money? That, my friends, is the power of backtesting. And today, we're looking at a deeply fascinating case study where artificial intelligence is revolutionizing this whole process, taking it from a tedious, complex chore to something you can pull off in seconds. So let's just dive right in.
I want to start right off the bat with this massive number, $4.8 million. No, this isn't some pie-in-the-sky theoretical projection. This is the actual net profit generated in a backtest by an astonishingly simple AI-tested strategy on Bitcoin starting from a baseline account way back in May 2015. And you know what the absolutely craziest part is? This entire strategy was built in a matter of seconds using a simple conversational prompt with an AI assistant. It completely shatters the idea that you need some complex, multi-layered algorithm just to find an edge in the market.
So here is our roadmap for today's explainer. Number 1, the AI revolution. Number 2, building the strategy. Number 3, crunching the numbers. 4, the ultimate benchmark. And finally, number 5, the real trading edge.
All right, kicking things off with Section 1, the AI revolution.
Historically, backtesting was this massive hurdle for retail traders. You either had to spend weeks manually scrolling back through charts, literally one candle at a time, or you needed a full-blown computer science degree to write the code. But those days are completely over. You don't need to be able to code at all. In our source experiment, the trader actually used Claude AI to act as a collaborative partner. That means no late nights crying over a misplaced semicolon. You literally just talk to it in plain English, and it instantly generates the exact PineScript code needed for platforms like TradingView. It's totally democratizing trading, leveling the playing field for the everyday retail trader.
Just so we're all 100% on the same page here, backtesting is simply the process of simulating how specific trading rules would have performed in the past using historical market data. It answers the ultimate question. If I followed these exact rules for the last 5 years, how much money would I have made or lost? It gives you an instant win rate, your risk-to-reward ratio, and your expectancy. Honestly, it's your psychological shield against market volatility.
Okay, let's keep moving to Section 2, building the strategy.
The workflow used in this experiment is beautifully simple. First up, the trader prompted Claude using his voice, asking it to build a backtest using a very specific indicator. Step 2, and this is absolutely crucial, he defined strict, realistic test parameters. He didn't just ask for some generic test. He told the AI to simulate a $10,000 account, include trading commissions to keep things true to life, and, this is huge, run a sample size of exactly 100 trades. You really need that 100-trade baseline to prove your edge over the law of large numbers. Finally, step 3, he just copied the generated code and pasted it right into TradingView's strategy tester. Boom! Done!
So what exactly were the rules of this $4.8 million strategy? Well, they're surprisingly straightforward. The asset is Bitcoin against the US dollar. The indicator is just your standard 50-period simple moving average, or SMA. The entry rule? Go long when the price crosses above the SMA. And the exit rule is simply closing the position when the price crosses below it. But here's an incredibly smart detail. The AI independently added a signal confirmation rule. It specifically stated that the candle must actually close above or below the line, not just wick past it. The AI knew that without a strict objective confirmation rule, the whole strategy would just be pure chaos.
Moving right along to Section 3, crunching the numbers. The code is in, the rules are set, and the AI goes to work processing years of Bitcoin data going all the way back to May 2015. Let's see what actually happened.
Prepare to have your expectations subverted a bit here, because this completely breaks the illusion of what a successful trader looks like. We just established the strategy made nearly $5 million, right? So you'd naturally assume it wins all the time. Well, actually scratch that. The backtest revealed that this wildly profitable strategy loses 70% of the time. Let that sink in for a second. Out of every 10 trades you take, 7 of them are absolute losers.
So how in the world does a strategy lose 70% of the time and still make millions? The AI analysis hit the nail right on the head. This is a classic trend-following profile. When the market is just chopping sideways, the strategy takes small, frequent losses.
It buys, the price drops, it sells for a tiny loss, over and over again. But then, Bitcoin catches a massive, undeniable trend. The strategy buys in, and it rides that massive spike all the way to the very top, easily wiping out all those little paper cuts and stacking immense profit.
All right, Section 4, the ultimate benchmark. This brings us to a really critical question, because let's be honest, Bitcoin has gone up so massively since 2015 that pretty much any strategy that buys it should look like a winner on paper. So the ultimate benchmark is this. Was all this fancy AI backtesting actually better than just buying Bitcoin in 2015 and doing absolutely nothing? The results here are frankly staggering. Just buying and holding Bitcoin from May 2015 would have yielded an unbelievable 26,000% return. It would have made you a multi-millionaire for sure. But even when you factor in the cost of trading fees and commissions, that simple SMA 50 strategy built by the AI actually outperformed buy and hold by roughly 1.8 times. It was almost twice as profitable as just holding the asset. But why? Why did jumping in and out of the market beat holding on for dear life? Well, the answer lies in that bottom metric, max drawdown.
And that leads us perfectly into Section 5, the real trading edge. This is the Trojan horse insight of this entire explainer. The true value of this data experiment wasn't about finding some magic formula to print money. It was all about risk.
83%. That is the maximum drawdown, the absolute largest peak-to-valley drop in account value that a buy-and-hold investor would have had to endure. Imagine watching 83% of your wealth just vanish into thin air during a brutal crypto winter. Very, very few human beings have the psychological fortitude to stomach that kind of devastating loss without panic selling at the absolute bottom.
And it's not just the psychological torture, it's the brutal, brutal math of recovery. If you suffer an 83% drawdown, you don't just need an 83% gain to recover. No way. You literally need nearly a 10x return on your remaining balance just to claw your way back to break even. Drawdowns completely destroy capital and they destroy traders. The AI-tested strategy, however, managed to cut that massive drawdown down to around 50%.
This gives us the ultimate takeaway from the entire analysis. The strategy's edge isn't buying, it's not holding through bear markets. It completely flips how we view indicators like a moving average. Its primary job isn't actually to get you in at the perfect magical time. Its real job is to get you out before the floor completely collapses. It kept the trader flat and safe in cash while the rest of the market was bleeding out.
Which leaves us with this final provocative thought. With AI completely democratizing the ability to instantly backtest and validate literally any idea, you just don't have an excuse to trade blindly anymore. So you have to ask yourself, are you trading just hoping to catch the next lucky pump, or are you trading with the hard data required to actually survive the bear market? Build your rules, test your data, and let the math be your shield. Thank you so much for joining me on this explainer, and keep learning.